We all know we're going to lose when it comes to trading. Losses are guaranteed, but we want to minimize these losses. Win the day, win the week, and win the month. If we do this consistently over and over and over, we are going to be profitable. We're going to make money, and that is the name of the game. We want to survive for the long term so we can thrive over the long term. If you're new to the channel, my name is James Strong. I make videos about trading the futures market, investing in the stock market, and personal finances. We trade to grow our capital, we invest to build wealth, and none of that's possible without having good personal finances. So remember, we don't trade or invest. We trade and invest. Losing money is a part of the game. Like I said, we're going to lose money, right? But it's not about avoiding these losses. It's about minimizing them. So we're going to go over, we're going to hop on the charts too in a quick second. We're going to go over how to minimize these losses and a lot of tricks and tactics I use. First and foremost, why does risk management even matter, right? Why do we want to not lose money? Well, I mean, it's kind of like a seatbelt in a car. You don't have to drive with it. You don't have to put it on. But I promise you, you get in a bad enough wreck, your ass gonna fly out the front window. You know what I'm saying? And so when it comes to trading, man, we're going to lose money. Like, that's a part of it. If you're not okay losing, number one, work on your psychology. And number two, find a different business, because this business requires being able to lose. But we want to make sure we're winning bigger and or more often than we lose. So it's a safety mechanism, man. When we learn how to minimize our losses in the short term, overall, we don't end up losing. We end up winning and making money. So look at it as a protective measure. It's like a seatbelt, man. It helps keep you alive and make the things that you want to have happen in your life. All right. The first thing, of course, is the most foundational is having a stop loss. So anytime you get into a trade, know where you're getting in, getting out. So this isn't even, I'm not even going to find an actual entry yet for this one, right? Let's just say we're getting in above this structure right here. If we're getting above this structure break, your stop loss, wherever you're going, right? You just say you're targeting a 1-to-1. We just use 1-to-1 for this example. Know exactly where you're going to get out. Is it at the low point, right? Where is the swing low on this little, higher low? Okay, put it under there. Know you're going to put it right up under. You're going to smother it. You can give it a little breathing room. Let me turn my magnet off. You can give it a little breathing room. I mean, if you're holding for like day trading, maybe your stop is down here. Obviously, that's going to change your risk to reward. But have a stop loss, number one. Too many people try to get into it. They want to just place buys and get in on some contracts or sales and get on some contracts and don't know where they're going to get in or out. And they just trying to free flow it. So first things first, no. Actually use it. Make sure it's not too tight. It's not too big. Make sure it's just right. You know what I'm saying? I know y'all heard the story when we were younger. Mama bear, Papa bear, and baby bear. You feel me? Hey, make sure thing is just right. Find the one that's just right for you, that fits your personality and your trading style. All right. So let's use that. Don't move the stop loss at all, right? Like basically, I mean, don't expand it. Do not increase it because price starts to go against you. When you set it, forget it, right? Leave it alone. It's there to protect you, not hurt you. Again, you're going to lose. So just understand that. Like sometimes I'll walk away. So let's just make that clear right now. All right. Let's literally make sure we use a stop loss. That's first and foremost. We can't get anywhere else. Use a stop loss. Even if you want to make it a trailing stop loss, use a stop loss. So that's the first thing we want to make sure. Okay. The next point. So let's find us a good setup we can go through. Let's try to find one clean. All right, boom. So let me draw a little area. So nice little demand. It's a couple actually. Couple demand areas. So nice little demand areas. Change your character. Change your character. Imbalances. And then demand. A lot of confirmation. Even little break of structure, another major break of structure right here. So that's why that one went so far. So we can use these two for our example. All right. Let's take partial. So let's get us an entry. We're going to use a simple 1 to 3. We'll put it on this zone. And I'm going to do a second entry as well. So let's get the second entry. Same thing. We're gonna aim for 1 to 3. Put it on the lowest point within the zone. Boom. Let's get us a 1 to 3 or 3 to 1, however y'all want to say it. All right, bet. Ooh, I said a 1 to 2. All right, there we go. Boom. So we here, right? The second main thing. First one, always have your stop loss. Second one, take some partials. Close some contracts. This is another way, another trick you use to stop losing money. If you know you have an average risk to reward that's 2 to 1 or 3 to 1, when it gets to 1 to 1, you can, number one, you can actually, and I'm gonna go ahead and cover some of these. You can set it to where you have now I used to do this. I stopped for that reason. This is a good example of something. It actually works out. Some people, when they get to 1 to 1, they move their stop loss to break even. That's cool if you're trading 1 to 1, maybe 1.5 to 1. Like myself, not the way I trade. When you're holding for these bigger moves, you have to account for fluctuation in the market. Price is not going to go straight to your TP if you're looking for a big risk to reward. It needs room to breathe. It has to fill orders and come back and fill imbalances and move. So, in this example, you can take some partials, and also remember, it does depend on your personality and where you're at in your journey. So we can take some partials. Let's say we got in with 10 contracts. Cool. Take half of them off. Take 5 off. Maybe you don't move it to break even. So you know, hey, no matter what, you'll make some money. Or let's say you take 6 or 7 off, right? So you're gonna make some money no matter what. Because if it loses, you take 7 contracts off. There's only 3 left in play. So if it loses, boom, you lose 3 contracts, but you took 7 up here, you're up 4 contracts. Obviously, whatever it is, depending on your instrument, per contract, per point, that you're going to make, right? Okay. That's one way. Another way is some people like to move it to break even at 1 to 1. Again, I used to do this. Well, how far are you targeting? If you're targeting these 3s, you can see right here, 3 to 1 is right here. So let me put a line so we can see it. This is TP. It's orange. This is 3 to 1 for our first entry, and this is 3 to 1 for our next entry. If you're moving it to break even at 1 to 1, it would have came up and stopped you out. So it would have came up to about a 1.9 and taking you back out. So understand what comes with this as well, right? If you're more of a scalper, you want quick little small moves. Like I said, quick small risk to rewards is maybe ideal for you. But just understand, if you're looking to expand more, this is not going to work. So what I would suggest more would be taking partial profits if you still want to get bigger risk rewards. Let it hit 1 to 1, 1 to 1.5. Take a few contracts off, maybe take 5 off the books. Cool, cash in. Let the rest play out, however you want to do it, and let it go. In this example right here, 1 to 1, it never came back. So it kept going. But you would have missed out, obviously on some money right here. The next trick we want to go through, and the tip, right, the advice I want to give is always make sure we have a fixed percentage or dollar amount. I am not a fan of fixed percentages. I am a fan of fixed dollar amounts. Why do I say not percentages when people say that? Well, you hear that industry standard, but what you will learn is a lot of professionals actually don't do percentages, because as you begin to make more money, what happens? Well, a percentage stays the same. So that means your risk goes up whether you're ready to go up or not. And people don't understand a lot of times that trading is mainly psychological. Not only that's crap, you know what I mean? Like, it's technical too, but a big portion is how do you handle certain things. So if you're not psychologically ready to go up to the point of where you're risking $400, $500 a trade, and you might be comfortable risking 200, stay at 200. So you may start with whatever you start with. I mean, it really doesn't even matter. But like I said, trading is more of a temperature. Wherever your thermostat is set at, your comfort zone, your, not when you say comfort, right? Your place where I'm responsible with this number, but I'm also not scared to lose it. That's your temperature range. Find a dollar amount and stick to that and master it. And do not try to expand it until you have truly mastered it and you got comfortable with it. So if that's $200, have a flat $200 risk. Of course, we all know it's not going to be exact, and that's why I say a range. You might be comfortable with $100 to $200. Okay, well, depending on the setup, it may be 150 some trades. It may be, depending on the contracts and obviously your stop loss placement. It may be 180 some. It may be 110 some. Have that range, risk that, and get comfortable, and then bump it up to the next dollar amount. But if you start winning and all of a sudden you're risking 200, you win 3-4 trades, you're in profit. Now you might be risking 350 a trade. Can you psychologically handle that? That may psych you out. So choose a fixed dollar amount as well. And then another trick I want to give you guys as well is cap your risk. Cap how much you're willing to risk for the day. So for example, yes, these two trades played out again, right? Change of character, break of structure, demand zone, all these good things. Cool. They could have lost. So what did I say at the beginning? I say we lose money in this game. That's the business we're in. It's going to happen. We want to win more and win bigger, but we're going to lose. When we lose, one of the biggest things people do, I've done it before. Everybody's done it if you've been in this business. You want to get your money back. You like, man, I shouldn't have lost. For some reason, you feel like you can't lose. Nah, I need to re-up. If your strategy or your rules for your particular playbook or your plan does not say keep trading, do not keep trading. So let's just say these, another day, let's just say there was I'm not even going to find the L. Let's just say these two lost, for example. Have your risk cap. So if you're doing a fixed dollar amount, let's say you're risking even numbers, $100 a trade. Maybe you don't risk anymore, no matter what, $300 a trade. This should include your fees and commission. So if you risk for some reason, you were able to risk 110 on one, you risked 120 on another. Hey man, if you're not willing to risk $50, you're done for the day. Sometimes that's the best thing you do is walk away, reset. Maybe the market, what's going on right now is news that day. You know what I'm saying? It's a little volatile. Maybe things happen, right? Certain reports came out. No, just walk away. Get yourself. Maybe you're not in it. Maybe you got family things going on, life situations going on. Maybe you had one bad loss you're still thinking about from last week. Go and walk away, get yourself together, come back another day. Live the fight another day. Walk away from it. And then one of the biggest tips I want to give you right now, maximize your risk to reward in a comfortable place. What do I mean by that? All right. What I mean by that is do not try to hit 20 to 1s, 10 to 1s to post something on social media to look cool for people you don't even freaking know. Nobody gives a crap. All that matters is you making money consistently. Does not matter. Who are you flexing for? Nobody, because nobody cares. Nobody cares what you're doing. They want what you have. They want to be able to do it. So don't worry about trying to show off. Just do you and stay in your lane. So when it comes to this risk reward, find a sweet spot. If you can do 1-to-1s and that's your personality and you like getting that tight, getting in, getting out, and you don't mind, hey, if you win 2 and lose 1, you're only going to be up 1. Do that. What makes it work for you? For me, I prefer about 3-to-1 to 5-to-1. Any more than that, I'm not really. I usually try to do 7s and 8. I didn't say try. I usually get them. I usually get 7, 8s. But the thing is, to get an 8-to-1, you got to be so precise and so patient that a lot of times it would go 5-6R in profit and turn back around on me. So I'm like, I don't even like that. So find a sweet spot. If that is 8 for you, great. I mean, do your thing. But realistically, 2-to-1, 3-to-1, you're solid. If you 1.5, you're solid. I would encourage something over 1-to-1, but a 1-to-1 is a great place to start as long as you're doing that. Some people do like 0.5s to 1. I think that's just crazy for real. I think that's kind of silly, man. Like, I'm not going to risk $1 to make 50 cents. But I mean, if you could do that 95 times out of 100, clearly it's a profitable system. So, but 1-to-1 is like that foundation minimum. If you can get at least 1.5 to 2, you're in the green zone. All these things are going to help you over the long run in your trading. All right. If you want to know more, I do have a training that's going to come out soon. I'm going to reach out to everybody on my VIP list. Make sure you're on my VIP list. You make sure you're a part of this because I'm going to reach out to you to truly ask specific questions on what issues you guys are having. I mean, you can tell me that in the comments as well, but priority goes to my VIP investors, right? Let me know, man, what are you dealing with? What do you want help solving? What's some things you want me to talk about that I can make content about and that I also going to make private trainings for? This training will not be released on YouTube. So it's only gonna be released to people who are under my VIP investor list or any of my other on my email list, right? So all that stuff down in my description below. Get that information. I have my futures trading essentials down there below as well, and all my other information for you as well. So make sure you tap in that stuff. And as always, if you like making money, then make sure you subscribe to the channel. And if you don't like making money, then don't subscribe. It's that simple, man. Much love.